Now, for more on China's economy, Thomas Hayes joins us live via Skype. He's chairman and managing member of Great Hill Capital. Always good to see you.
Likewise. Thanks for having me, Rochelle.
So as we saw there, over 18% growth for the first quarter, a huge number, the strongest growth figure since 1992. So give us some context then. What's working well in the Chinese economy right now to really make this possible?
Well, Rochelle, there are a number of factors working well. What we have to keep in mind, this was slightly below expectations of 19.2%, and we're coming off of a very low base. Last year was in the middle of the pandemic, negative 6.8% GDP. And when we look quarter on quarter from Q4 to Q1, after the positive revisions to Q4 of 3.5%, we had growth of about, in China, about 0.6%. So as we know, China was the only developed country last year to have positive GDP. That's a very positive thing. They got back to pre-pandemic levels of production by September of last year. But the strengths have really been in exports, global demand for computers, for equipment, for video consoles, even patio furniture, electronics, et cetera, have really driven 2020 and the first part of 2021. Infrastructure, you see cranes everywhere, buildings going up everywhere, a lot of investment in property and infrastructure, highways, railroads, electric vehicle charging stations, et cetera. And then finally is property investment and property sales. Sales were up 95.5% for Q1 year on year, and property investment jumped 25.6%. So those are the big bright spots that we're seeing right now, Rochelle.
And as you mentioned, even though that 80% is a big number, it did miss analysts' expectations. So what do you think is still missing from the Chinese economy so it can grow beyond the expectations?
Yeah, so I think what's really lagged is the consumer, and part of that has to do with the lagged vaccine rollout. What it's led to is there's so few cases that when there are flare-ups in different regions of the country, even during holiday season, the government immediately shuts down the area and all businesses. And this is really a strain on small businesses in particular, if you think about restaurants, in terms of consumer confidence, lack of clarity, if they're going to have a job to go to that restaurant to work or to go to that restaurant to eat. So that stop and start mechanism with the slower vaccine rollout is very, very tough on consumer sentiment. But that is starting to change, Rochelle. And what we saw this week was that retail sales were up 34.2% year on year versus 28% estimated. And they're up in March 1.75% over February. So things are starting to take shape as the vaccinations are slowly but surely rolling out. And it's also a tough sell because the people say, well, we have so few cases in the country because it has been pretty well contained. Why should we get the vaccination? That's also led to a slower rollout. But now the government is slowly and surely encouraging people to go ahead and do that, right, because to open up to global commerce, it's going to be essential that everyone gets vaccinated.
So then looking ahead, we're seeing that Chinese officials say they expect the current recovery to continue throughout the year. Do you agree with that?
Yeah, there's no question. You know, Beijing set a very conservative target of 6% for 2021. They want to tamp down some pockets of the economy that are a little bit overheated. Wall Street consensus is that GDP will grow about 8.5%. I'm more in that camp. I think it could even exceed that. And part of that is if you look at the manufacturing and non-manufacturing PMIs that came in this week, they both beat expectations. So we're seeing good economic growth. The risks, I would say, is that you have Beijing has started to withdraw some of the stimulus a little bit early, in my view. However, this will be offset by the U.S. stimulus, which has been $5.3 trillion in fiscal spending so far. We've got another $2 trillion on the way. That will help with exports, and that will help things stay on track. The one thing we do have to keep in mind, though, and the risk to this assessment is the possibility of inflation. The producer price index numbers came in a little bit hot this week, which was worrisome. Some of the appliance makers, refrigerator makers, et cetera, are now having to pass through the rising costs that they're seeing in terms of rising metals costs, copper costs, et cetera. Right. So we do want to keep a close eye on inflation moving forward.
And just very quickly, we have about 30 seconds. Two things. A lot of people are hoping that China's economic growth will translate into global economic growth. And a lot of people are also worried about the evenness of the recovery. What are your quick takeaways there?
Yeah, I think it's really going to be dependent upon the consumer coming back, and that's going to be a function of the vaccinations. I think that's certainly going to happen. Obviously, the exports and the stimulus have driven things up until now with infrastructure and property. The consumer is starting to perk up. That's going to be the key for an even recovery moving forward, and that demand will be very positive on a global basis.
All right, thank you. Always good to see you. Thomas Hayes there, founder, chairman, and managing member of Great Hill Capital.